The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another beautiful day at the headquarters of Technical Trading and Investing, TFNN.com. And, of course, we've got a beautiful November 5th out here. If you're down in the Florida area, things are really starting to get great for the weather. A little cool in the evenings and the mornings, and nice and warm and sunny during the days. Just can't get any better. Of course, all I could think of after the news last night of the elections is, boy, we just don't have the politicians we used to have. Today in 1960, Abraham Lincoln was elected the 16th President of the United States over a deeply divided Democratic Party, becoming the first Republican to win the presidency. Lincoln received only 40% of the popular vote, but handily defeated three other candidates. And back when we had a little bit more, it's the 6th. Yes, how could I miss that? I missed a move a day. We are on the 6th. But what can you say? All I can always remember is probably one of the single best speeches. Of course, no recording devices back there at the time. But what can you say? Always liked the first part of the Gettysburg Address. Probably the finest speech ever made, and it ran just right about 2 minutes.
77 years ago, our fathers brought forth on this continent a new nation, conceived in liberty and dedicated to the proposition that all men are created equal. Now we are engaged in a great civil war, testing whether that nation or any nation so conceived and so dedicated can long endure. We are met on a great battlefield of that war. We have come to dedicate a portion of that field as a final resting place for those who here gave their lives that that nation might live. It is altogether fitting and proper.
Well, anyway, they just don't either talk like that, and of course, politicians are not like that anymore. Willing to give it all, even civil war, to fight for what they believe in. Now they can roll over for a campaign contribution. Anyway, what do we see moving out there today? Probably the big news is Tesla. Came out hammered today, just hammered. Let's get a quick quote for them. They're off 27 points. Got to a low of 146.36 today. What was mostly interesting was this morning the drop started the NASDAQ trading triggers of the short sale circuit breaker, which doesn't happen very often. In fact, I'm trying to remember the last time it really happened on a big stock. You get these biotechs, that kind of stuff, that happens a great deal. When's the last time a non-biotech stock or a stock that was involved in fraud had a NASDAQ trigger on it? It's been a while since we've seen a big stock like that trade out here. Of course, there's a lot of problems with Tesla. I've been chronicling them for a while, but things went pretty much south fairly quick right after the earnings. They were down about $5 or $10, but when they got into their discussions and earnings call, they said, well, we just don't have enough batteries, so we're going to have to build a battery production plant, and we can't really build any more cars with what we have now, so we're going to have to build new plants. All the European sales just lowered the U.S. sales. They just shipped them over there. So it wasn't like they could actually build anymore. And the reality of building at a huge car company that has huge capital costs is starting to wane on people. Everybody thought that somehow Tesla had turned this into a chip company like Intel, where they were going to take tiny little chips that they could make millions of, although it was very difficult, but they could crank them out overnight. And wouldn't have to have these giant factories. Of course, Intel makes 65% margins. Tesla was making about 25%, which is about 5 times the average for the rest of the car companies in the world. And what are we looking at in Tesla? A car company that was yesterday priced at selling somewhere around 350,000 cars a year, when if they mined all the lithium for lithium-ion batteries, they couldn't ever build that many. That's if all the plants or all the mines in Chile went full tilt boogie and started building that. Well, I've been talking about it for a while, but never let facts stand in the way of a good stock running higher out here. Of course, George Soros said it best: all of economic history is one lie and deceit after another. Your job as a speculator is to get on when the lie is being propagated and get off before it is being discovered. And that's pretty much it. So hopefully, if you were in Tesla, you got out of this thing early. Didn't wait until the straw that broke the camel's back, which was economic reality. Tesla has, I think, sold cars in all of 14 states, and it's not that it's a bad car or a bad company. It's just the economic reality is if they're going to build cars and sell them nationally, they're going to have dealers that they don't have now that they're going to have to cut in. They're going to have to build plants to build cars. They're going to have to build plants to build batteries. They're going to have to spend a lot of that money that they got, and it's going to be tough. The other part of this is that Tesla has now probably set a high mark, and everything from here now and in the future is probably going to be downhill. Tesla, they've sold their soul into the future to get this huge run in stock and the stock price that they could sell into to generate enough money. So will they be a car company for a long term or at least a longer term? Will they be gone in 2 years? The answer is no. The question is just when they acclimate to the standard model of car makers, which they don't have any magic elixirs other than making a car that's probably slightly better in an electric mode than every other car manufacturer. But BMW, a couple of these car companies are getting much closer, and eventually they will, because of competition, build a car that's as good as Tesla. They will have dealers on all the corners, and Tesla will probably have to eventually be bought out by one of the other companies, I suspect, at a much lower price when the reality of economics comes back to bear. Dope tax.
What are you people? On dope?
Kind of interesting to me. Mostly, there are so many fraud stocks out there on selling marijuana. We occasionally hear them in the Tampa area down here during the talk radio ads where they're pushing these stocks that either sell software for accounting for selling marijuana or other things like that. And the FEC and the SEC and every other three-digit abbreviation in the U.S. government is warning that most all of these things are frauds. When you look back into them, they have $100,000 or $200,000. They are one guy sitting in a closet somewhere, maybe. Most likely he's probably sitting in the waiting room ready to leave the country if any of these stock frauds actually make any money. But we're probably going to see more and more of this. I tend to think of myself as a libertarian, which means unless it really affects me, I don't really care what you do. If all this medical marijuana is so needed, I'm wondering about the wisdom of putting taxes on it. But what can you say? Just up in smoke. Maybe there'll be a dollar bill somewhere with Cheech and Chong on it someday in a dope we trust. But what can you say? IPOs. We were looking or talking about a lot of the IPOs yesterday. And Barracuda Networks, we were talking about this one because it had been so heavily advertised on radio also. The question was just how well was this thing going to do? It priced out at the bottom of the price range at $18 today. It opened slightly higher. It's been as low as $20.78 and as high as $23.77 and trading out at $21.19. But I suspect this may be one of these stocks pushed at the very end of a huge bull market. That has a long way to fall. Not that it's not good company, but I have a feeling that the economics on this were vastly overdriven as some of the other stocks out there, like Tesla, just this one as the IPO. Of course, we're all getting ready for tomorrow. We're going to put on our party hats. We're going to sing and dance and drink all night because Twitter is coming out, and there's going to be a lot of new multimillionaires for that. And some multimillionaires are now going to be close to more billionaires. The whole idea that Twitter, which does not make any money now, is priced at, $16 billion or valued at $16 billion. A very interesting concept for me, mostly because the idea is, well, we're just going to build market share, and then we're going to go after actually making money, which was, of course, the exact same story we heard with Facebook. The question is, now that slowly Facebook was able to get above its IPO price range shortly, what is in range or available for that company long term? Unfortunately, a lot of these technologies are fly-by-night and are fads. Is Twitter a fad? It is probably more faddish than I would like to invest in long term. No reason not to trade it. It is a real company. But I see way too many companies like Amazon, who has gone 10 years without making any money. And the idea is that anytime we want to, we can make money. All we have to do is flip a switch and we're going to get it. I suspect that that's about the same story, or it hits me the same story, the way that stories did in the dot-com bubble, where everybody was saying, we've got the eyeballs, we've got the clicks, we've got everything else. In my world, in God we trust, all others pay cash, and companies better make cash out there. And I really dislike it. Barracuda Networks, watch this one closely. I suspect we're going to see a lot of pullback in it. We'll be back in just a few minutes.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I'm going to invite you all to give me a call at 877-927-6648. That's 877-927-6648. Look forward to your call. Of course, we're all in hold mode. Probably about 10 o'clock, 10:30 tomorrow morning, we will see we will see Twitter roll out as a IPO. They are not going to price it until after the bell tonight, so we still don't know. But it's in the interest of all the street names to hold this market up as long as possible. We continue to see weakness when we look at things like the summation index. Well, maybe we'll take a look at that right after the break. Of course, we're looking at the S&P most of the time here on this show, and that's up 5 points, 2.2 billion shares as we get to the bottom of the hour. So, again, another day of a light volume, another day where we're having some of these big high flyers come back out. In my newsletter last night, I was short fossil going into earnings. And not a big play for us. I actually covered it already today, but looked fairly sweet out here. Still, it's trading at 127.89 right now, but looked fairly a decent short opportunity. And so he made a few bucks on the thing. I thought maybe it had a much bigger opportunity to come back down to 110. I think it still does. might have to take one more shot at this thing. It may have one more push up before this thing rolls back over. But I think it had a good chance to go back to 110. But made some money. But the risk reward is, for what I got was not much. I'm not interested in making $4 or $5 on a $130 stock. I'm much more interested in making 20 or 30 bucks on one of these stocks if I'm making an earnings play, which for the most part I don't do too much. This one, you could just see that they were pushing this thing up, and it was like pushing on a string, but they could continue to push up with little or no volume. This thing was in testing a high yesterday and going above that high with less than 2 million shares going up against a high with 5.1 million shares. Again, you can always give me a call at 877-927-6648. Want to remind everybody that we've got the semi-annual Tiger Dollars promotion going on. We will basically give you a cut of about 25%. So if you would like to get my daily newsletter, The Path of Least Resistance, my weekly Tech Insider newsletter, or the Art of Timing to Trade charts, you can get all of those things at a discount by getting your Tiger Dollars now and signing up. So go to the front page of TFNN and check those out. Okay, wanted to look at a few other stocks out here. Zillow, which was very interesting last night. They were pushing this thing after the bell fairly hard, and I actually had this in my newsletter this morning. And it was very interesting that this thing rolled over fairly quickly. I thought maybe there was maybe $2 more in it, and I wanted to short the thing. But Zillow actually was going up against a high volume down day. That was on the September 20th. Thing came down on 3.9 million shares. You'll see my arrow floating over it on Tiger TV or in the den. This thing was coming up there. I thought maybe this thing would get into the bottom of the candle. That close was at 92.02. I thought maybe we get $90 because maybe even in the next day out here. Got as low that day as 88.52, and boy, we pretty much got right into that. This thing reversed at 88.69 for the high today. But a lot of these stocks in that housing sector showing a lot of weakness. RYL. Ryland Homes also coming up. When's earnings on this? I think it's the next few days. Hang on just a second, and I will state it. That was the January 27th. Is that right? Yeah. So it's a little while away. We've already had earnings in this. But volume today already higher also than the last major low. That low was October 9th with 1.1 million. We already have a 1.2 million shares as we go into that. Is that right? 1.7, almost 1.8 million shares yesterday. These things really look like they're going to go drive back down to their previous lows, which is either 33.04 on Ryland or back to 29.63. We will be back in just a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, looking at Open Table, of course, it came out with earnings last night. Just how many of these stocks have we seen, have I chronicled in this show, that have blown right up to what should be minor resistance levels, only to see these things close right back down inside these top trading ranges? I think we're getting some fairly clear signals in this market. In this one, it was August 26, $78.36. Basically 400,000 shares. We already have 2.5 million shares today, and this thing is having a tough problem holding this higher high out here. We had all the volume necessary, I think, today to blow away even the volume that hadn't been exceeded to, what was it, August 1st? When you had 3.2 million shares. I think we're going to easily get that in this today. But very interesting that these stocks, even with a lot of volume, I think we just have a very tight market with a lot of shorts. And as soon as they see new 52-week highs or even highs that busted the last highs, people are very quick at pulling the trigger on these stocks and getting at them. We had a question in the den on whether or not LinkedIn was topping out here. And this is probably just the opposite of Facebook. This is a company that was making money before they became public. They understood how to make money. They sell ads and they sell data to headhunters and companies. And it's really kind of a place to put your resume out and be contacted by other people that are looking for talent in very certain sectors. Of course, a lot of those people that buy their services are just that. They are companies saying, hey, I need this guy with this kind of experience. Who do you have listed on that? Let's go after these guys and find out if there's anybody there in that sector that would that we could use. And, of course, they're willing to pay fairly dearly and almost in a Mark Twainish kind of way. People, of course, are freely putting all their information up on their website. Always reminds me of that deal where the young boy convinced everybody to paint the fence for him. And not only did he convince them to paint the fence, but he got all of their old bottle caps and pieces of chewing gum and pieces of string and all the other kind of stuff that some guy in probably 1880 or 1890 living along the Mississippi River probably would have had as toys. And what can you say? But certainly almost like the Pied Piper, everybody follows them right in, dutifully puts all their information on there and lets the other people sell it. Of course, there is a symbiotic relationship to it, but LinkedIn is not one of these companies that has not figured out how to make money. So I'm not looking at this one blowing apart the same way as a lot of these other companies have. It does not have the weaknesses in the business model or the business plan that most of the other ones have. Now, what it does have is a lot of heavy volume off this last top at 253.66. Energy was very strong, so this thing's probably not going to anytime soon run back up here. It has tested not only the gap that came on 7.5 million shares on August 2nd, twice now, 4.4 million shares in 2 days ago on 3.3 million shares. So you're basically looking at this thing probably in some kind of trading range around 215. If the wheels fall off the market, could this thing come back a little bit farther? No big deal, but I think that there are probably a lot better stocks out here that have huge gaping holes in their business plans and in their business models. Also have not figured out what it's going to take to actually get them to expand to the PE ratios that these companies have, like Tesla. But LinkedIn is not one of these companies that I think has huge problems. Their problems would probably come in the fact that we have another recession, that people aren't going to be hiring as many people. But maybe that'll give us an opportunity to buy LinkedIn once again at a much lower price. I'm not saying this thing's very strong out here, but you have a couple of things that would actually make it a better looking stock, and that is a high volume high on October 21st. It was higher than the untested high on September 11th. So a lot of things out here that actually look fairly bullish for LinkedIn, and I'd like for this thing to come back. Maybe if it could get back to under $200 one day, maybe even as far as down as 180, maybe this thing would be a nice one to play for the next move in an improving economy where people are hiring more and more super technical people. We talked about Zillow. I wanted to talk about a company that sold $1 billion worth of stuff in the last day, and that is Activision Blizzard. They have Call of Duty Ghosts out in the last couple of days, and already $1 billion. Maybe the first company to go to 2 billion shares. This thing had a little pop today, kind of sold off out here, mostly because they're getting some fairly negative reviews, especially on the PC version of Call of Duty Ghosts. So keep an eye on that. But it is this thing is kind of I think priced a lot of this forward market money in, and also the other problem is that why they've got a lot of these big titles being kicked out the door, there isn't anything in the way of new franchises coming in behind them. Just more and more money being spent on less and less titles, and not a lot of software out there being developed to come in behind it. And I think that's the biggest problem with these game companies is they continue to ramp up the amount of money that they'll put into one of these games. $250 million is not beyond the scope of reason for something like Call of Duty Ghosts. And of course, if you can sell $1 billion in one day on the first day it comes out, and maybe as much as $2 billion worth of it on $250 million, not a bad business model out there. The downside is you've got to have something, and of course, people weren't buying Call of Duty version 1. No one knew it was going to sell that well. No one knew anything else. And, of course, you've got to go back and be planting new trees if you're going to harvest from that same sector. Probably the biggest knock against these companies are that they aren't really developing a lot of new titles in the future. Of course, none of these companies probably going to be hurting too hard. The Xbox One for Microsoft is going to hold these companies up, I suspect, through Christmas. MSFT. I think that's going to be, besides buying a tablet, it's going to be the big thing. Microsoft probably is going to be very close to topping out here. We saw, we've seen them really have a nice little pop up today, finally out of this trading range from the high 35s and low 34s. But just not a lot of reason to hate Microsoft at the moment. Getting rid of a horrible CEO. You've got a lot of new products coming out that aren't as bad as they used to be. The software business is doing fine, and we're looking at an upgrade cycle where they're going to force people. Still about 35% of people are using Windows XP. That thing is going to be open season in a little more than 4 months. There's going to be absolutely no updates, no ability to reinstall it. And I think Microsoft is starting to move ahead of that market. I think we're probably going to see Intel follow it yet a few months away. I'm still looking for a pullback. Be very interesting to see whether Microsoft can hold these highs over the next few days. Let's see, what else do we have? Oh, I wanted to actually get into what is in play because there's a few other stocks out here that I wanted to get into. So give me just a second here to update my stuff. Let's see. See what else out here. Kind of one of the few companies breaking the tide of retailers out here is RL, which I think is Ralph Lauren, right? Yeah, Ralph Lauren. This thing's got a nice little spike up today on volume. Where is that at? Beat quarterly EPS by 3 cents, $2.23 versus a $2.20 estimate. Had a decent short interest in it. Revenues rose 2.8% year over year to $1.92 billion versus the $1.91 billion that they were looking for. But going to see probably 5 to 7% higher growth next year is what they're saying, and that was enough to probably spook a little people out of holding their shorts, I suspect. This thing's back into the gap that it came down with high volume on it. This is one of the few that has fairly comparable volume already today. It did come down on significant volume, and the question is 3 million shares on the 7th of August. We've got 2.3, is that right? No, that's not enough, is it? Let's take a look at it here. Yeah, 3 million. Well, we'll get close. We're about 2/3 into that. You would like to see certainly a lot more volume up here. If this thing stalls out, probably be able to come back and look at this one back at 170. Again, you can give me a call at 877-927-6648, 877-927-6648. JCOM off 10%. Ooh. JCOM. Let's take a look at this one. This is like a lot of these stocks that we've been talking about, which is they're either blowing out with massive volumes, not holding the high. In this case, this thing was being held up for a long time coming into earnings and going sideways. Very interesting chart pattern out here. Of course, not too many days ago, it was at 56.24, 48.29 for the low today. And they are saying they missed quarterly EPS by 6 cents, reaffirmed 2013 guidance. looks like they're going to be light on revenues next year, and that's what the market didn't like. Normally kind of light volume for a stock that I would trade, but J2 Global, JCOM, pretty good indication that there just wasn't a lot of juice left in these. And of course, these stocks, if they're going up, they certainly are going up the elevator. If they're going down, people are jumping off the top of the building. MELI. Mercado Libre, which this is another one that had been hanging up here and pulled back into its trading range on earnings. Missed EPSs by 8 cents. And again, we're seeing a lot of these stocks missing on the top line and the bottom line now, where we saw just a lot of them running a little short of revenues during the first week of earnings season. This one tried twice to get over the 136 high of August 2nd that had 2.4 million shares, and we tried with 400,000 shares on October 4th. Of course, came right back in it. Had a real push with 480,000 shares up to the October 22nd high, and then it pulled back in. Of course, everybody was just trying to hold this thing high and hold their breath as they whistled by the graveyard on this thing coming back down. But down on heavy volume, this looks like it recovered a bit today, but looks to me like this has the 102.44 low of July 24th setting up, and it may take a little while to consolidate these out and find a low. Mercado Libre is a online platform in Latin America. Services are designed to provide users for buying, selling, and paying, kind of a PayPal for Latin America, but not doing so hot right now. So time to go to Taco Tuesday, spend a few less dollars. To see if there's anything else I wanted to show out here. AU is out, kind of finally moving some of these gold stocks with earnings. Come on, there we go. And hang on a second here. Come on. Huh. I'll have to look at that one later. I want to see what else we had out here. A few other stocks that I wanted to take a look at. Adobe's getting awful interesting to me. When we were talking about some of those stocks breaking the previous highs with light volume, Adobe's certainly starting to look that way. I think they've got earnings. When is that earnings date? Let's make sure. I've been watching this one for a while. December 12th. So they're going to be late in this. Adobe certainly looking rather weak. My question is whether or not they're even going to be able to hold up into earnings. They really needed to have some kind of sign of strength when they went through $52.96. Of course, a lot of the software they have Mac-centric, and of course, the biggest claim to fame they had was Adobe Flash, which is pretty much being thrown on the ash heap of technology, but not a lot of energy in this last leg. Last leg's off about 25%, maybe a little more off that big leg that started in August 20th. We'll be back in a minute. Give me a call, 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we close up the end of the program today, of course, we want to be watching a few things, and I think that's the advanced decline line is the input for the summation index. We'll be looking at a few of the other ones out here, but that's really what I'm looking at to probably try to get a top tick in this S&P and probably make a play on volatility. But we've got the market up 6.5 points on the S&P cash. And somebody sent me a nice email about the divergence between just how much the S&P is moving and some of the other indexes out here. But I don't spend a lot of time looking at those. Maybe I should at highs. More I'm interested in is just how the advanced decline lines come in over the next couple of days. I suspect we're going to have a high in the market tomorrow, just like many other people. But it may be one of these things that they hold out just a little longer for us. Of course, we're getting awful close to getting into options expiration. And of course, we are in the what is known as Weird Wally Wednesday, when everybody is starting to go in delta neutral already for the expiration on the 15th. So could we get all the way into the 15th before the markets roll over? And the answer is 80% of the time, options expirations are bullish. I am waiting to see whether or not we've got any kind of strength after tomorrow, or probably late into the day tomorrow, to see whether or not that is it. But it would not be beyond the scope of reason that they hang this thing out to the 15th. Everything we see, all the forecasts, everything from mall traffic says that we're going to have a very tough retail season. And I suspect that maybe we get into that maybe even the next week on the broad indexes before they crest and make a high. I don't think that there's a lot of risk higher, maybe 15 or 20 points higher on the S&P cash. But this market has been one where it really doesn't matter what's going on, and we've seen so many stocks blow apart that had no fundamental value, that that you were paying massive amounts for growth that wouldn't come for 5 or 10 years, if at ever. But we're looking at that. So, but I was going to say, what I'm really interested in looking at is this, and right now the advanced decline line pretty close, even though we're 6 points higher. Just 52% of the NYSE stocks are higher, declining stocks 46%. So this is not some kind of broad, slightly higher market day out here. On the NASDAQ, we're actually negative on the day. We've got 46% stocks higher, 51% stocks lower. So we're going to be wandering into that. Of course, what I'm really thinking about looking at is the summation index, pretty good indicator, a longer-term indicator of whether or not we're having the same kind of weakness. If you go back and look, see, if we go back and look, I want to highlight that section right there and just how much it's looking kind of like this section out here at the same level. The numbers really don't mean that much on the summation index, but the ability to go sideways for a little while before the next shoe drops is not beyond the scope of reason. So if you looked at the last one that we had out there, did it take a little while before the reality that the top was in and we were headed down for a while came in. But keep an eye on that. We'll be watching the next couple of days. Anyway, make sure to check out those Tiger Bucks, and we'll be here tomorrow. Same bat channel, same bat time.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.